Hello traders, welcome to my channel. In today's video we'll be looking at order block. Okay, and the order block is the most widely requested strategy when it comes to smart money concept, and a lot of my viewers has asked me to make a video on how I trade my own order block, what I look for in an order block. Okay, the truth is not all order block that is tradable. Okay, because you've seen an order block in a particular area or area of the chart and you decide to take the trade. No, all order blocks are not tradable. In this video I will show you which order block are tradable and how to use a high probability order block with one simple tool. If you want to understand that, stay back, relax, stay and watch this video to the end so that you will not miss a thing, because every minute, every second in this video will be valuable. That I promise, because I'm about to pour out all that it is about order block. Okay, now let's start with the definition. Okay, now order block, most people will say, is the last up candle before a bearish move or the last down candle before the bullish move. Okay, yes, that is correct, but you want to look at what order block really is. An order block is simply a move. Okay, an order block is a move that manipulates traders to think that the market is going in one direction, but instead the market reverses on them. Okay, I will explain that on the chart. Then when you refine that particular move, okay, then you can now talk about the last up candle, maybe because you want a better entry. Now let me explain this with a candlestick formation. Okay, now we have these three candlesticks, for example. Okay, this is a move up. All of a sudden we then have what? A bearish move down. Okay, that then broke structure. All right, let's have this. Let's change this color to green. 1 minute, please. Let's have this. Okay, now let's see something like this. This is the low. Now this is what an order block is. An order block is the move from here. Okay, probably we have a high here, okay, we have a high here. Okay, now this is the high. In this case, including the wick. I don't want to draw the wick because it will take my time. Now we have this formation. Okay, what an order block is simply the move, okay, the manipulative move that took out this high, okay, inducing traders to trade long. Okay, it induces what? Traders to trade long. Perhaps breakout traders that they say that the price has closed above this, they put their pending order on the retest and they're looking for the price to move on. Okay, now when this happens and all of a sudden we have a move down, that means the banks are shifting the order flow from bullish to bearish, okay, in an instant. That means this move, this entire move, is your order block. This entire move, okay, the move that led to the manipulation, of this high, inducing traders to take the trade, is your order block. Okay, now if this was to be on a higher time frame, for example, it wouldn't make sense for you to enter at this point here and then stop loss above. That is why the refinement comes in. You refine it up until the up close candle before the move down. Okay, this is where the refinement comes, and this is what a lot of people teach out there, that this is the order block, the last up candle before the move down. But the order block, you need to understand why it's there. Okay, an order block is introduced, okay, as a manipulative move. Okay, the intention is not to go higher, but to induce people, traders, okay, like you and I, to think this market will go up, but instead the market reverses. Okay, so that when price comes back into this zone, this entire zone is where you can trade from. Okay, but since we as traders, we are trading with leverage, and secondly, we don't have much money in our account. When I talk about much money, I mean millions, okay? Hundreds of millions in our account to take the trade from here. Okay, once the price starts filling up this imbalance, that is your entry. But because we want a better risk to reward, we can refine this entire order block movement into a single candle. Okay, into a single candle, so that when price tap on that candle, that is our entry, and we have what? Our stop above that high there. Okay, so that is an order block for a bearish order block. Now for a bullish order block, the same thing goes. Okay, we have moved down, okay, we have moved down here, then all of a sudden we have a move up. Okay, all of a sudden we have a movement up. Okay, let's change this color, this to green. Okay, that's the standard colors. Okay, now let's say we have a low here. Okay, this is the low. Okay, and this is the high. So this is the high here. Okay, now for a bullish order block, it's simply the movement down that manipulates or trick traders into thinking this market is about to go lower, but instead price reverses. So the entire move here is the order block. Okay, a move that induces traders to go in the opposite direction, where the institution wants to take it in another direction, especially the ones that give out a kind of breakout strategy, induces a breakout strategy for traders to go short, then price reverses back on them. So this move from here to this point is the order block. This is order block, and I can call it a manipulative move, a deceiving move. Okay, a move that tricks traders into the market before the market goes the other way. So if you are trading a pullback into this zone, you are correct. All these are your order block. Okay, but as a retail trader, we want to refine it so that it will boost our risk to reward. That's why we do this, and we say that the bullish order block is the last down candle before the move up. So when price comes in here, okay, we decide to take the trade and then move, thereby giving us a good risk to reward. So what is being taught out there is simply the refined order block. Okay, but the order block concept is all about manipulations, because this market is algorithm driven, and it's filled with manipulation. It's full of manipulations. Okay, the bank tricks us, induce us to trade by giving us some form of patterns on the chart, which will induce retail traders, okay, to trade. Okay, we are all retail, but just that the logic we use in trading is now different, because we are trading from the perspective of the bank, okay, of the algorithm, what the algorithm does. Okay, now that is the definition of order block. Okay, now what are you looking for in order to pick the right order block? Some people say, Hope, Master Rabba, how can we pick the right OD, the right order block? How can we pick the right order block? Okay, now to do this, I have a set of 3 rules. I have a set of what? 3 rules to follow. Now, all these 3 rules do not have to be met. All you need is what? 2 of these rules to be met. Okay? The first one is the OB must manipulate the high or low depending on the direction. Okay, the OB must manipulate the high or low. I will explain what that is. In this case, when you go back here, this OB, the move, must manipulate the high. In this case, for a up down trend, maybe you want to shift the direction, you must manipulate the high in this case. Okay, thinking the market will what? The people will think in the market will want to go up, whereas it goes down. So an OB must what? Manipulate the high or low, or in a bullish case, the OB must manipulate this low, the previous low before, must manipulate that low and then move. The second rule is this. The second rule is it must lead to a shift, or let me use the word a break of structure. Must lead to a what? A break of structure in the intended direction. Okay, I will explain this. This is what it means. The intended direction was to go bearish. So when an OB manipulates the high, that's the first thing you need to look at. You must wait for it to what? To break the structure. That makes these OBs what? Valid. Okay, that means when price trades into any of this zone, most times does not need to get to the last point. Okay, just that as I explained earlier, as traders we like to get the last point because it gives us a good risk to reward. Okay, when price moves from this area, it doesn't mean your order block do not work. It just means that you over refined it. Okay, you over refined it, okay, for a better risk to reward, but in that case you missed the move. So you need to understand that from this point here to this point here is the order block. Okay, so now what makes this order block valid is because of a break of what? Structure. A break of structure. And when price return back in, you can decide to what? Take that trade and ride the trend down. Now same thing here for a bullish order block. The first thing you need to see is what? A manipulation of the low. Let the order block manipulate the low. Okay, and the second one is what? To create a break of what? Structure. A break of structure. So when price returns back to the OB, you can decide what? To take your trade. Now the last one is not compulsory. Okay, but if you see it, it simply means you have a high probability trade. It must create imbalance. Okay, it must create price imbalance. It must create price imbalance. Okay, the third one I need to see is that when the when the market started moving in the intended direction, it should create what is called what? Imbalances. Meaning from here, you can see we have imbalance here. We have imbalance here from here to here. So all these are imbalance. The market should create imbalance. Okay, there should be imbalance before the order blocks. Okay, now once you see that, you can now know that okay, this order block, the order block is what? Is high probability. Then you should take the trade. Okay, those are the 3 things you need to follow, the 3 rules, okay, to know which order block to pick. Now I'm going to make an illustration for a reversal trade. Okay, how do you trade order block at reversal zones, and how do you trade them in a continuation zone? I'm not going to do in-depth on the entry in the lower time frame. Okay, I just want to explain to you what you need to be looking for. And remember, the market is fractal. Whatever you see plays out in the 1 hour, in the 4 hours, in the daily, also plays out in the minute based what time frame. Okay, now having gone out through all these theories, okay, let's go to the chart. So our first illustration here is this. Okay, we are looking at how do we trade order blocks during what? Reversal. During reversal. Okay, now let me get rid of this first. You can see that the market has been in an uptrend, okay, up until this point. Okay, now what happened? These three candles, 1, 2, 3, those are our order block. Okay, it is the manipulative move. You can see it manipulated what? This high. Now by so doing, it induces what? Traders to think the market will what? Will continue pushing. You can see a 3 solid move. Okay, traders that are less savvy will think this is a break of structure, and they pull back, they decide to what? Go long and the rest. But as smart money traders, we know this is just a manipulative move, and this is the what? Order block. Number 2, what are you looking for? You are looking for what? A break of structure in the intended what? Direction. So when price move sharply down in the intended direction, we must have what? A break of structure. Okay, a break of structure. So that means that when price trade back into this block, okay, we can decide to what? To initiate the trade. And the last one is what? Imbalance. There should be some form of what? Imbalance. And in that case, it's not compulsory, but I can see imbalance here from here to here. This is imbalance. Okay, it created a form of imbalance whereby you expect price to return back in. So as price comes back in, you can decide to take your trade here. But what we do as smart money traders is we can now refine it to the last up close candle. Okay, the last up close candle for a better risk to reward. So when price comes in here, we can decide to what? Sell at this point, stop loss above. And as you can see, price went in, respected our stop loss, and then market started what? Going down. And in that case, you could have made some few pips. Okay, so that is an example of what? A reversal strategy of what? Order block. You are using order block for a reversal trade. Okay, so in this case, do this order block meet our 3 rule criteria? The answer is yes. First of all, did it manipulate the high? Yes, it does. Does it create a break of structure? Yes, it did. Okay, does it create a form of imbalance along the way? Yes, we have an imbalance in here. That means price should trade back into this order block before we initiate what? The trade. Okay, now if you take your 2 short position, this is how you trade it. Your stop loss will be just above that. Okay, I don't place my stop loss on the high. Okay, I give some few pipettes for it to move. So on that note, in this case, you just have roughly what? 3 hours. Okay, if you understand the longer picture of the market, you can hold your trade longer, since you know where the market is what heading to. If you do a proper multi-time frame analysis. Okay, so against what most people do, they say, oh, this is another block they trade, this is another block they try to trade there, and you can see when you try to trade at random order blocks, you are going to encounter what? Losses. Okay, oh, you say, oh, this is the last up candle, you try to trade there, you see, you fail. Okay, this is a failure here. Price reacted a little, then took it out. So we don't trade blindly the order block. Instead, we give ourselves set of rules to follow before we initiate the order block. Now, the continuation is the recent trade I took here on pounds USD, the recent trade. Now we have the market in a downtrend, and if you have been following my series, my predict the market series, I told you that our target was the weekly low. Okay, there's a weekly low that was our target. Okay, so and we have been milking the market right from the top. So at this point here, I wanted to take an entry, okay, in order to take the price lower. Now what do I see here? I saw an order block. Okay, let me remove this. Prior to now, we have this eye here. Okay, we have this eye here. So when you play, oh sorry, it's too fast. Now these three candles, these three white candles are simply your what? Order block. They are the move that initiated what? The manipulation of the eye. We have the eye here. We have this eye. This was the eye. And you can see this last up candle initiated the manipulation. Okay, this eye was taken. So are the other blocks within this zone valid? Yes, they are valid. One. Number two, we have what? A break of structure. Number two, we have what? A break of structure. Does it have the other criteria? Yes. Number three, it created what? Imbalance. It created imbalance. If you can see price from here, if I'm to take it back to this point, okay, if I'm to take it back to this point, you can see here that we have imbalance that was created while the market went in the intended direction. Now we can then refine this to the last up candle. Okay, there's nothing wrong when you take your trade here, because this candle, this blue white candle, the bullish candle, started the move. Okay, started the manipulative move. There's nothing wrong for you to take the entry here. Just that as forex trader, we want the best risk to reward. Okay, we can be patient, wait for the price to tap into the last one, the last up close candle before the move down. So that is why most smart money traders, we prefer using the last up candle before the move down. But the mechanism of an order block is simply to manipulate traders. Okay, letting them think the price will go in one direction, whereas it's moving in a different direction. So now this particular order block has that three criteria. Number one, it leads to what? A manipulation of some kind of eyes. Okay. Number two, it led to what? A break of what? Structure. Number three, we have what? We have imbalance, fair value gap that was created along the way. So therefore, we can have with high certainty or high probability. I don't want to use the word certainty because there's nothing certain in the forex market. So there's nothing certain. Okay, and remember what I do here is simply educational purpose. It's for educational purpose. Is to help you improve your trading. I am not a financial advisor, so do not consider what I'm saying here a financial advice. It's just my own personal opinion on how I trade order blocks. Okay, so this order block have the three criteria we are looking for. So therefore, we can decide to take this trade and then watch as the market goes. And you can see the market move for, I think this trade was 1 to 5 hours. Okay, from that particular order block, because it's a recent trade I took. So we have it here. Your stop will be above. Okay, then you target what? The low. This was the low we are targeting. Or the first thing you need to do is target the week low. First take profit, then the final take profit will be our target for a 1 to 4 hour. So that was the trade. Now, can we have a situation where market comes and then clear up this high? Very possible. We cannot predict the market. Remember, this game is simply a game of probability. Okay, there is no form of certainty. Just because you see an order block has these 3 criteria, you then feel 100% of the time it will work out. No, it won't work out. Okay, but what I can say is that you have a higher chance when it happens 10 times, at least 8 times from my analysis, from my back testing, 8 times you will be profitable. Okay, but you need to back test. You need to refine your own strategy, look for a way or a way or two where you can add to what I've shown you here in order to improve your trade based on your trading style and the rest. And remember what you see plays out on this 1 hour chart is the same thing. And in case you want to refine this to the lower time frame, you can do that. Just maintain these 3 rules. Okay, these 3 rules should be what maintained. They are: one, manipulate the high and what low. Number 2, it must create a break of what market structure. Number 3, it must create a form of what imbalance or FVD, fair value what gap. The moment you see these 3 things plays out, that gives you what a signal that you should consider order block tradable. Order block without this, at least 2 of these, is not tradable. We will not trade these order blocks. Okay, I will not go through the chart, start pointing them out. Like this one, for example, if you look at this order block here, did it lead to any manipulation of the eye? No, it didn't. Okay, even though it led to a break of structure, but there was no manipulation of the eye, a liquidity sweep. That's the most important thing. And in that case, what happened? The price took you out. Okay, in this case, market took your stop loss and then before moving. So that makes this order block. This is the main order block now. Maybe in the future, when price comes in here, in the future, you can decide to trade. Why? Because this order block, this move took out the eye and also break structure, and also created what imbalance here and imbalance here, fair value gap. So in the future, when price comes here, we can decide to what take that trade, just because it has the 3 criteria we're looking for. Okay, it has the 3 criteria we're looking for. So on that note, I'm going to call it a day here. Okay, but if you want to learn more about the smart money concept, this next video will show you that. Okay, and I will see you in that video. Make sure you subscribe, make sure you like this video. Okay, thank you for 1,000 subscribers. As I showed this video, we have gotten to 1,000 subscribers, and that can only be achieved because of you. And on that note, I say thank you, and that is why I am making this video for you. Hope you enjoyed. See you in the smart money concept video. Au revoir.